Hello from Mounted Markets. This is Ahura with the Global Economic Outlook in the week ahead, the first week of the last month of 2024. Last week, let's start first with the last week and review what we had last week, and then we can see what we can expect from the week ahead. Last week generally was the geopolitical tensions week. The week started with the positive news from Israel and Lebanon ceasefire for 2 weeks, for 2 months, for 60 days. At least it's going to be a ceasefire before President Trump's new government, actually, generally the new government starting the White House. But it can continue and for longer if the both sides they keep the commitments. Generally, the week started with the positive news, but then continued with the negative news we had in Syria. With we know that the protests started to take back some cities, including the Halab in Syria, which they're usually the we can say the some parties that are supported by they are supporting actually by Turkey against the governments. Bashar Assad, which is supported by Islamic Republic and in Iran, and also the Russian government. Generally, the tensions increase again in the Middle East. What exactly? When we were thinking that it's going to slow down again, it's increasing in the Middle East, and we have to wait and see the market reaction when it will open on Monday. Besides that, we had another geopolitical tension in Ukraine and Russia. We know the Russian they continued attacking the energy bases in Ukraine, while the Ukrainian also attacking now the Russian territory by Western weapons. Now we know that there are some reports that the more it is possible if the Western countries they are probably preparing some militaries to send to the Ukraine. We have to wait and see what they're gonna militias. Will they send some militias or not? That's what we have to wait and see. On top of that, in France, we had another just in France the tension, political uncertainties in France are also increasing between the new budget they have to approve by this for this new budget. Maybe even we can see that maybe even we can see the earlier election in France. The political condition in France is not such in a good position. It can affect the Eurozone economy as well. That was what happened, what we had in the geopolitical front. On the data front, last week we didn't have that much important data to watch, but still, from United States we had some positive numbers. CV consumer confidence increased from 109 to 111, showing that the consumers in United States they have more trust in and new governments in they started again to spending more. That while this at the same time, new houses and pending houses, both of them they fell. The sales, new home sales and pending home sales, both of them they fell mostly because of the more we can say somehow the higher rates that still they are in the market. We had a FOMC meeting minutes as well for the November meeting. We understood that in a Fed meeting in November, there were more dovish people than hawkish. That was the reason that we saw that the possibility of the chance for holding the current rate from 42% fell to 34% at the last day of the week. But generally, the Fed speakers that what they had Fed speakers with there is a big some differences between what the Fed speakers they had and they told in their speeches during the week last week when they were supporting mostly hawkish comments, when they had mostly hawkish comments with what they had in FOMC meeting minutes. Last week, RBNZ also cut the rates by 50 basis point for the second time in a row as the economic growing in New Zealand is slowing down while the inflation also is a target with the central banks aim, so they had a reason to cut their rates. On United States, let's continue with the United States, the GDP price index, initial jobless claims. Generally, the data that we had from United States last week, in all of them, they're better than expectations, which right now they're supporting the idea that maybe the government will have more, especially if the next week, and with the data that we have in next week, with the NFP numbers that we have in next week, if these positive data they go towards in line with the expected positive numbers, which we are expecting to see in next week's NFP, that I will talk later about that, then we can count on holding the rate cut, holding the current rate in the December meeting and not cutting the rates. Let's talk about that later in next page when you are talking about the week ahead. Generally, last week with the data that we had from United States, they were mostly positive. On flip side, on other side, the data that we had from Eurozone generally, the Eurozone economies generally, they were not a positive, especially with when we know that the inflation in Eurozone also increased from 2% to 2.3%. And the core inflation was steady at 2.7%. Generally, the data showed that the inflation in the Eurozone started to increase again, while the other economic data published from the Eurozone, they were not such a good data. On China, we had a very good export, last week export numbers. And after last week's export number, now we can see that Chinese composite PMI steady at 50.8. This is while the non-manufacturing or service PMI fell to 50 from 50.2, which means that domestic demand is still weak, and China can continue its challenges inside the country. But about China, I have to mention that for the next week and weeks ahead, generally, when we're getting closer to the new year with the more firstly, right now, with the more international demand, which they can increase the export, and then later with the Chinese New Year at the end of the January, which can increase the domestic demand and domestic, generally the domestic improvement in economic improvement. Then generally, we're expecting a little bit more positive data in November and December, and also can continue towards January as well. These are the other sides of the data that we had and we're going to have. We had it last week. Generally, the data last week, they were positive from the United States and can continue more concerns in the Eurozone. Thursday and Friday also were because of the Thanksgiving. It was holiday in the United States. In the week ahead, again, in the United States, we're going to have a very busy week with the NFP numbers, especially during the NFP. Before NFP numbers during the week, we will have the ISM manufacturing and non-manufacturing data, generally the ISM surveys. We will have the ISM numbers, and then we will have the GLTs, which we're expecting to see. Generally, in labor market data, let's say going to go to the Friday with the NFP numbers that we're expecting to see in NFP numbers. Generally, in a labor market in the United States, after last month's surprise with only 12K newly created jobs, we're expecting more than 180,000 newly creating jobs after we know that we have some strikes in Boeing and other companies, which the people they stopped working, and now they're back to their job. At the same time, we had kind of other things. I forget the tornadoes. Yeah, we had the tornadoes in down south. Yeah, in south of United States. And after that, this, the covering from this condition that we had during the last month after the streaks and tornadoes, we can now say that, okay, now there is a time to laborers to get back to their work, which means the more newly created jobs. So that's why that's the reason that we're expecting better jobs compared with the previous months. So generally, with the more than 180,000 newly expected jobs to be created, we are expecting unemployment rate to stay at 4.1%, while with more jobs, we expect to see average income to increase by 0.3% in November. So generally, the data we are expecting from the United States, we are expecting to see a little bit more positive data. Wait, don't forget about the Sunday OPEC meeting, which can continue till Monday as well. We will have to wait and see more data and data to come from this OPEC meeting and see what they decided to see the oil trend in the till end of the month. I will talk about the oil trend and the price we expected, price for WTI on the chart a little bit. I will give you more detail on that. On Monday, after that, last Saturday, data about the manufacturing PMIs, official numbers. We will have the private sector numbers in manufacturing and non-manufacturing PMI numbers in China next week. As I told, we are expecting a little bit more positive data from the China, the data from which we will have on Monday, and also the continuing the data on other days with the stocks and service PMI on Wednesday, and also again on Thursday, the imports, exports, and trade balance that we are expecting to see. We're expecting to see a little bit more positive data from the China. Generally, about the China, we are positive. Same for the United States, we are positive. Out of the China and United States, we have some data, PMI, Purchasing Managers Index numbers for most developing economies across the week. We are generally somehow we can say a little bit more cautious about the PMI numbers, especially in Eurozone. We have to watch and more cautiously. Maybe the manufacturing PMI can see a little bit more, a little bit increase in November, but still it can be under 50 expansions levels. But on the service sector, we can say that the service sector is still weak. The service sector is still weak after some good numbers that we had in 2 months ago during the Olympic time in Europe. But the service sector, we're again expecting to see the service sector still again under 50 level. But maybe for November and for December, continuing in these 2 months, we see because of the new year, holidays, selling the hotel selling tours, selling and stuff like that, restaurant sales. So maybe we can see some positive numbers in retail sales and also the PMI numbers. So that's why even if you saw some uptick in the numbers, we should not be so optimistic about the Eurozone economy still, because these numbers, we can say the seasonal numbers just because of the new year. Same thing that happened during the Olympic. During the Olympic, the service PMI in Eurozone increased to 55, which then later fell to 45. So that's why even if you had a positive number 1 or 2 months in years, we should not be so happy about it. As we know, generally we are facing too many challenges in that economic area. So this is generally that what we are expecting for the week ahead. Generally, it's not going to be a very busy week. Mostly the focus will be on US economic data and geopolitical tensions. Let's go to the charts. Okay, this oil, we're talking about the geopolitical tensions. The geopolitical tensions and the OPEC meeting, they are the main market drivers for the week ahead in energy sector, and especially in WTI chart. With the increasing tensions in the Middle East getting closer to the new year, we are not expecting to see more price fall after what happened on Friday. We are expecting to see, the last week after the ceasefire between the Lebanon and Israel, we had some decline in some fall and decline in oil price. But with what we have right now, what we can see in the chart, we can say that oil price again can continue next weekend. We are expecting to see the oil price above $69 and $70. On other charts, let's check the US dollar chart. US dollar, we were expecting to see the US dollar between 106 and 106.90 last week. Something that happened exactly a little bit. The week closed a little bit lower than 106, but around 105.80. But now for the week ahead, we're expecting to see a little bit slow downtrend. Above 105 mark for the US dollar index, but it's going to depend on the results of NFP results. That NFP we are expecting to see a positive data NFP after the last week's positive economic data. If the NFP also become a positive, especially if this positive could be kind of the surprise and a little bit within a bigger number, then we can expect to see more chance for the holding the current rate in a Fed meeting in December. Then it can support the US dollar to increase, and then we can see more recovery in the US dollar index. Otherwise, we're expecting to see the slow downtrend towards 105 mark in a week ahead. Weaker US dollar last week generally supported the gold price to recovery, which is expected to continue the next week as well, which getting closer to the year end. generally we are expecting usually we are expecting to see a positive numbers in a gold chart with these data, with these expectations, with the geopolitical tensions getting closer to the new year. Now are not expecting to see any another fall, in gold chart. So therefore, slow uptrend is still continue to be seen in the week ahead and week later till end of the year. On the stock market, we were expecting to see the stock market to be closed slightly lower last week, which didn't happen. Now, with the more than 80% generally for the December generally in generally in December with the data that we have since 2002, so actually we can say since 2000 till now, we can say that more than 80% at the time in December stocks closed higher with around 1.5%. That's why for the rest of the year we are not negative on the stock market with the new candidates in I forget to say that in United States we know that Mr. Trump had a new candidate. He picked up Scott Bessent for as a secretary for the Treasury. We know the Treasury Secretary Scott Bessent, which is the 62 years old. He's very well known in he's a hedge manager, and that's why he's very well known in Wall Street. And we know that generally the Wall Street is positive about him. And with this positive reaction that we had in Wall Street, we can say that okay, the stock markets can continue showing the positive reaction to this for his candidate. That's why we are generally positive about the stock market with all the data and the condition the new candidate for Treasury. So he's also he's of course the stronger US dollar as well. We shouldn't forget about that. Generally, we are positive about the stock market with all the data that we had and we're going to have in December, especially in the week ahead. But if at the end of the week, in Friday, if we have the NFP numbers with the big surprise, positive surprise in NFP numbers, then we may see some pressure on the stock markets. About the cryptocurrencies, Bitcoin still can continue its gain as long as it's trading above 94,000 US dollar. Next target can be around 110, 112, between 110 and 115. Actually, we can say 1,000 US dollar as long as it keeps $94,000. But falling under $94,000, $90,000 and $87,000 could be the next targets for Bitcoin. This is generally what happened last week, what we were expecting for the week ahead. And if you had any other question, please do not hesitate to write in the comment section or try to get back to you as soon as I can. Have a good time. Bye-bye.